connect with the management of Fabtech Technologies. We are being joined by Ashwini Singh, CEO, as well as Asif Khan, who is the promoter of the company. A very good morning, gentlemen, and thank you so much for your time. And firstly, Ashwini, if I can come to you. Firstly, many congratulations on your listing today to both of you. And first up, seems you have set aside almost 127 crores for the working capital from the IPO funds. If you could detail how you plan to optimize your working capital cycle, what are the plans there?
Right now, earlier our ticket size of the ordering was to the tune of 50 crore to 70 crore. Now the ticket size is getting increased. We are getting orders worth 100 crore, one ticket size, and for those orders, we need a good working capital, to run the projects and all. So, hoping that we are going to, grow with the big ticket size as well.
Okay, and Asif, hi morning. The IPO also allocates around 30 crore rupees for inorganic growth initiatives. Help us understand what is the ideal size and strategic area for potential acquisitions, and what is the timeline for deploying this capital of 30 crore rupees?
So we are in the farm emerging markets, which requires essentially an image to be acquired when you operate in these areas. We have a very beautiful traction going on in farm emerging markets, and we are in active final stage discussions with a European-based company to invest around 90% in them, which will give us, which will improve our conversion rates going forward. And I would add to what Ashwin mentioned. Our ticket sizes are increasing, and going forward with the funds flowing in the regions of Africa, Middle East, Persian Gulf, the order values are upwards of 20 to 30 million US each ticket, and the speed is going up. So that way, automatically, the working capital cycle shall get optimized.
All right. Along with that, Ashwini, the order book is around 904 crores, but that's over 2.7 times the FY25 revenue. What's the projected timeline for converting this into revenue?
Actually, just to cover the risk, geographical and political, what we do, we book our order 1.5 times of revenue what we target. Right now, we do have 900 crore plus orders with us. The minimum duration of a project varies from 12 months to 24 to 30 months. That depends on the project size and the ticket.
Right. And Asif, coming back to you, you have a track record in over 51 projects in challenging geographies like Saudi Arabia, Egypt, and more on that side. What percentage of the current order book is exposed to these markets?
No, we have largely de-risked. If you see, the order book comes from around 21 to 26 countries. 10 years back when you go, it was concentrated in only 2 countries. So as we go forward, we are coming out of no-go countries and getting into some safe geographies. Having said that, the international market is a very beautiful flavor. The best advantage that we could get is we are present with our own teams in these so-called tough geographies, which we don't find it tough. It comes very naturally to us, and as a result of which the competition profiling gets a lot better. And these are the markets where many countries would shy to go into, and that gives us an added flavor. And honestly speaking, we do not really consider these as tough geographies, though on the outset it looks like it, but we are within them. The project management teams are there, people talking the same language, and we have been operating in these geographies since 15 years, so it's like home.
Actually, what's your outlook on the global biopharma capex cycle? Does it support the current demand environment?
Total capex size globally, it's a huge number. We are looking for the right market acquisition to maintain our growth rate. every country is now getting medically independent, and they wish to have their manufacturing setup. So we are selecting the safe geographies where we can participate and execute our projects.
Internationally, the last few years from 2020 to 2025 has seen $400 billion, $350 billion of capex. Going forward, this is going to go in the next 5 years from 2025 to 2030 is going to go to $400 billion. But if you see the farm emerging markets, and I again repeat, Africa, Middle East, Persian Gulf, MENA and Maghrebian region, this will attract roughly around $25 to $30 billion, and out of which 12 to 15% is our share. Number one. Number two, now medicinal independence, the word, when you say it starts from OSDs, goes to high-tech of mRNA vaccines, onco, biosimilars, which is a 10, 12-year-old story. There are projects happening which we are doing. The first vaccine project of COVID's, the COVID vaccine project in Egypt is ours. The first onco project in Saudi is ours. The first biosimilar in Algeria is ours. So now when you see coming back with medicinal independence story, you have a huge visibility. Because after the medicines and high-tech medicines, then you have the packaging material, then you have the empty hard gelatin capsules, then you have the PVC foils, then you have APIs. So this is going to add to a lot of opportunities unfolding, and the fund flow in this region is now getting open, and you will see a lot of traction happening in these areas, right?
Okay, so that's the word coming in from the management of the newly listed Fabtech Technologies. Ashwin and Asif, thank you so much for your time today. Ashwini and Asif, pardon me. On that note, we'll wrap it up on this edition of Midcap Masala. From Srishti, me and the team that put this show together, thanks so much for tuning in. Stay tuned to ET Now. Bye now. Till now.